My simple idea is make as much money as you can for the next 6 years, because then you can secure lifestyle. If you've got your house, you've met your Maslow's hierarchy of needs, it's a lot easier to deal with change. And the fourth churning says, this change is going to be very difficult for society to deal with. So let's cover the hierarchy of needs first, and then we can feel secure in doing it. And that what leads you back again to this whole idea that crypto is the easiest way to unlock your future, because it's the asset that actually makes up for all of the lost time that we've all had.
Raoul Pal explores what he refers to as the economic kaleidoscope, a period of profound uncertainty and fast change in financial markets. Market conditions fluctuate wildly throughout this time, giving some people tremendous possibilities while causing others to suffer crippling losses. Raoul highlights that success in such a setting requires more than just financial know-how. It also requires emotional fortitude and strategic self-control. He warns against frequent dangers like overleveraging in the quest for rapid gains or forsaking well-thought-out strategies to follow trends. Particularly as speculative assets like meme coins or specialty NFTs become more popular, these traps frequently result in expensive errors. As an alternative, Raoul's main piece of advice is straightforward but effective. Focus on preserving your capital and positioning yourself for long-term gains. Before we dive deeper into Raoul's insights, take a moment to like this video, subscribe to the channel, and turn on notifications for more content like this. Enjoy the video.
So everybody is going to see this, you're going to lose your mind. So the banana zone is more about losing your mind and not screwing it up, which is why I keep reiterating the don't fuck this up thesis, because you will always feel like it's not happening to you. And then it's like, oh my God, 2 weeks of, oh my God, I'm up 100%. And then it's like, well, why are they making money? It's really bizarre. I'm sort of used to it now, but not really. Yeah, and you end up like with your, let's say your core bet is Sol, and before you know it, you're chipping away a bit of Sol because you're going to try that trade, and then you can try, and then you have to stop yourself. So stop doing it. I mean, I've just done it today. I've just done another trade, which was taking Sol away. I'm like, what are you doing? But this could be a great trade. It'll be fine. I think we got 6 years to kind of A, unlock our future, and B, before the economic singularity happens. Now, whether it's 6 years, 8 years, 5 years, it doesn't matter. Directionally, we have a couple of business cycles left before we don't understand anything. Arguably, and this is a contentious one for you, arguably if it wasn't for COVID, we might not ever be able to have recessions. And I've thought about this a lot, and I'm starting to think that maybe recessions can't happen outside of exogenous events because of how we manage the credit cycle by debasing currency and making the collateral never go down too much, so the world falls apart. But by the time we start adding all of this technology in, I don't know what it means. And so all I know is in 10 years' time, it'll not be you and me, it'll be our AIs. I've got an AI avatar on Real Vision right now that reads the daily news, which is a video of me. And by next week, there will be a Raoul voice chatbot trained on my entire Twitter feed, all my YouTube, and 100 books I've fed it. I haven't even put GMI into it yet. And in my voice, you can chat to me, ask me any question. I have no understanding what this means, because we will all have our own personal AIs. And who's running who at that point? How powerful is our AI? All of this stuff. So anyway, my simple idea is make as much money as you can for the next 6 years, because then you can secure lifestyle. If you've got your house, you've met your Maslow's hierarchy of needs, it's a lot easier to deal with change. And the fourth churning says, this change is going to be very difficult for society to deal with. So let's cover the hierarchy of needs first, and then we can feel secure in doing it. And that what leads you back again to this whole idea that crypto is the easiest way to unlock your future, because it's the asset that actually makes up for all of the lost time that we've all had. Yes, the aging population gets worse, but it's offset by the technology. And really, the cowbell is because GDP is not growing fast enough because of the aging population. So let's say the trend rate of GDP is 1.75% in the US. If interest rates are higher than GDP, you're eating up all of the GDP growth to pay the interest, basically, at a very simple level. So we need a faster growth. But here's the hook, is who actually earns the money in that AI world? Because it's not you and I, it's who? It's the AI, the agents. Okay, well, how does that accrue? How are the governments going to tax them? Because they're going to have to tax them. If not, there's no government income. We have an entire new system we have to rebuild. And people haven't started to think. People have started to talk about it. Deep thinkers are thinking about it, But the political class has not got their head around this yet. So yes, we solve all of the debt issues. It goes away. But as we bring in AI, the velocity of business creation and destruction just gets faster and faster and faster and faster. No longer will it be available for people to IPO. It's even going to be difficult for VCs that have like this 7-year business model. Crypto VCs are used to having tokens where you can realize capital, velocity of cycle. But the only way of dealing with this is going to be ICO style markets, tokenized equity, or whatever that means, a hybrid instrument. Look, there's a lot there that I talked about, and there's plenty more other parts, but it's really simple. It's a $3 trillion, when it keeps moving every time I say this, it's now $3.5 trillion, but let's call it $3 trillion because it's easy math. $3 trillion asset, it goes to 100 trillion, at least, within 10 years. That's just extrapolating out the trend rate of growth. I'm not doing anything crazy, wild things. It's been growing like this. And yes, growth will slow over time, but then we've got AI agents who are going to be using this stuff as well. So fuck knows how fast this thing continues to grow. So here's this big wealth generating machine, the fastest growing asset, the best performance of any asset in history, keeps going. We get to 100 trillion within 10 years. So we're only 3% of the way there. Think of how much wealth this is going to generate for humanity. What? I'm saying $97 trillion. Let's assume you think, and probably rightly so, Raoul's an utter moron. I'm going to halve it. That's still 50 trillion, which is 100 years of value accrual of the S&P 500, of all the largest companies in America. People have no comprehension of this.
Raoul Pal points out that although commodities like oil and copper can have brief price recoveries, demographic trends may limit their ability to expand in demand over the long run. The exceptions are nations like Canada and Australia, which have mostly depended on large immigration rates to spur economic expansion. Even these countries nevertheless struggle to sustain this approach over time. Raoul also emphasizes how crucial it is to be realistic and flexible in the rapidly evolving world of today. Being knowledgeable and adaptable is crucial when negotiating discussions about inflation, comprehending the growing significance of cryptocurrencies in the global economy, or getting ready for the changes brought about by artificial intelligence. His advice? Focus on long-term opportunities, avoid making decisions based on emotions, and embrace the transformative potential of technologies like crypto and AI. If you found this video insightful, make sure to subscribe to the channel, hit the bell icon for updates, and share this with anyone looking to stay informed about global markets and economic realities. Thank you for watching, and let's get back and hear his following words.
Well, because if you add derivative markets, which are 1 quadrillion, FX markets, they probably trade a quadrillion a year or more, add in the global bond market at about 300 or 400 billion, the global real estate market at about 300 billion, trillions with a T, global equities like 200 trillion. I mean, this is la la land. And then we haven't got the activity created on chain by agents using it for economic activity, or us putting all contracts online, or us using it for deeds and stuff are contracts. But yeah, it's the architecture for the digital age. It's as simple as that. And people think it's all about currencies, cryptocurrencies and NFTs. What we're seeing is just vast, rapid experimentation with use cases. Memes are speed testing the ability to spin up a token for multiple cases, thinking about how we can tokenize culture, giving us a future work where we can be part of something. There's a lot of testing going on, but we've battle tested these chains. I mean, they're launching 100,000 tokens a day or something stupid.
I know.
And we did the same with DeFi. We keep battle testing it, it breaks. We keep doing it and doing it and doing it really fast. NFTs, we speed tested, okay, does this technology work? Yeah, it did work really well, but was that the future form? No, that was the first form. AI and robots are the largest deflationary nuclear bomb we have ever seen. People have no comprehension of what this means, but it's not there yet, right? We're not seeing productivity mirror. We're all trying to figure it out right now. So we're not employing it at scale. So I get that. They'll drive down the oil price. Yes, we'll have a cyclical recovery in inflation that always happens, but the labour force participation rate keeps falling. We're just going to shut the borders on immigrants. The reason Canada's economy has been decent is because the immigration rate was so high. The reason Australia hasn't had a recession for 27 years, highest immigration rate in the Western world.
Yeah, as long as you don't look at per capita GDP, then it's a shit show. But on the top line, it looks good because of that.
Top line. That's right. That's right. Yeah. And it's also what distorts the housing market. I can't see where it comes from, the structural inflation. Now, people will say, particularly the commodity people will say, well, AI is going to require a lot of energy and a lot of copper and stuff for data centers. I get it. We will definitely have a cyclical recovery. Is it enough to offset China's aging population? China's not there buying commodities in the same rate of change that it used to, because its population is the fastest aging on the planet. So they're dealing with their trend rate of GDP collapsing from 11% in the early 2000s to, they claim it's 5%, but it's probably 1%, 0.5% right now. I mean, where the hell is the demand going to come from? So yes, cyclical demand. I just don't see a secular trend change. Now, what I do is I try and observe why people are saying things. So when you look at who's saying that, what unveils itself is generally people who are gold bugs, who believe the world should be high interest rates, pull Volcker, and gold should be roaring. They have a particular worldview. You have to be pragmatic about this stuff and say, well, we've had falling inflation for the last, my entire lifetime, basically. Has something structurally changed that you're going to increase demand? Well, it's not money printing, because we've been money printing for decades now, and it's never produced inflation. In fact, Japan couldn't produce inflation. It was never an inflation thing. It was a collateral thing.
Raoul Pal presents an insightful analysis of the global financial and technological scene, highlighting the enormous size of markets and the changing digital architecture that is influencing our future. He points out that worldwide bonds, equities, real estate, derivative markets, and foreign exchange all amount to trillions or possibly quadrillions of dollars in economic activity. However, Pal stresses that this massive financial ecosystem is just the beginning. He clarifies that blockchain is the fundamental architecture of the digital era and encompasses more than simply cryptocurrencies or NFTs. Present-day breakthroughs, including decentralized finance, DeFi, and tokenized assets, are experimental stages in which technologies are battle-tested through quick iterations. The same is true of NFTs, which demonstrated the feasibility of blockchain-based ownership even though they weren't the ultimate version. Although this revolution is not yet fully scaled, Raoul also examines the deflationary effects of robotics and artificial intelligence, characterizing them as a revolutionary force that will alter economic dynamics and productivity. Regarding commodities, he admits that demand for commodities like energy and copper occasionally recovers, but he contends that long-term structural demand growth is constrained by demographic trends like aging populations and declining labor force participation. If you enjoyed this video, please like, subscribe, and hit the notification bell to stay updated on groundbreaking insights from Raoul Pal and other financial thought leaders. Thank you for watching, and we'll see you in the next video.